My name is Pete Moloney. I am a Principal Associate in the Insurance Disputes team. I am a general coverage specialist, but my background has predominantly been in property and property damage, including recoveries and coverage claims. There's quite a lot to cover today. Introduction by its nature is obviously quite high level. We'll be getting through quite a bit. So if anyone does have any questions, please do contact me. My email address will be coming up at the end, and I'll happily take questions afterwards as well. Talking of which, the recording will be available afterwards, and it will be sent to you by email. You can also pop a question in the Q&A box, and my colleague Harriet Strevens, insurance solicitor PSL in the Insurance Disputes team, will field them and will read them out to me at the end. That's the agenda for today. We're going to go through common perils, all risks, standard exclusions, and common claim issues. I will probably go through points 1, 2, and 3 fairly quickly, because the biggest issue really is item number 4, the common claims issues. What I'm actually going to start with is what is property. A lot of people just think of it as bricks and mortar. It's your home, it's the factory, it's an office, it's a shop. But of course, although it's under a different name in terms of insurance and the policy itself, specie, fine arts, jewelry, wine collection, even cash, that is all property. Goods in transit, money, that's property, and cargo as well. Although would be handled under a different policy, that likewise is considered property. Again, a lot of people are unaware about household in terms of household policies, in terms of what actually includes property. It can be anything from swimming pools, you see hedges, it even includes installed hot tubs in some cases, wind turbines. It would also include, or rather the property policy household one would commonly include loss of domestic oil, loss of metered water, damage to your garden, replacement locks. And quite often that doesn't have to be after a theft. It can actually be when you've lost your keys. Security upgrade as well is often covered. That obviously is after a theft. You can't ask for your insurers just to upgrade your security because you don't think it's good enough. Moving on to the common perils. I'm not going to read all of those out. They are fairly self-explanatory. Fire, lightning, explosion, there's escape of water, there's impact when a car hits or a vehicle hits a property. Subsidence is not always standard and is usually optional. It also comes with a higher excess as well. Don't forget that the policy will also include alternative accommodation if it's a private household policy, loss of rent if it's a property owner's policy, and business interruption if it's a commercial policy. All risks policies. That's the very common insuring clause for all risks policies, physical loss or physical damage, then further down, unless it's excluded under this section of the policy. So effectively it's covered if it's not excluded. I have seen some all risks policies where they say physical loss or physical damage falling within defined within insured risks, and then insured risks is a defined term. Which would then include what I had on the previous slide. I guess from a personal point of view, I would query whether that's an all risks policy because it's got to fit within a particular peril, and then the exclusions will be operative as well. But those policies are out there, and as I say, that's just my personal view. Standard exclusions, you will see these in every single property policy, or rather I've never not seen them in a policy to date in the 18 or so years I've been doing this. Other standard exclusions will include gradually operating causes. I've set some out there. Another example might be, for example, a leaking pipe. So a joint is just dripping. You only notice that it's dripping when you see a stain on your ceiling. That wouldn't be covered, or rather would be excluded because it's a gradually operating cause. The difference is if the joint of the pipe suddenly fails, that would be a sudden and unexpected escape of water, which is covered by the policy. Faulty workmanship is one I put down there as well. I've seen claims made under policies because the contractor that they got in to do some work has has not done a particularly good job, and the homeowner or property owner wants to claim under their policy rather than going after the contractor. Sonic boom is one I put down. I just read something the other day in the news about some houses being damaged when some jets took off and caused sonic boom. That is not a very common exclusion as well. Common claims issues. I guess I could spend a whole day talking about the common claims issues. So what I've done is I have picked out the claims issues that I have dealt with most frequently over the years, the ones that are either more problematic, or, as I say, the ones looking back over the years I've been doing this, the ones that I've had most frequently land on my desk. I've started with the basics. Is the insured named on the schedule? It might sound basic, but I've had claims where somebody else has made a claim under the policy. It's entirely genuine. There's no fraudulent intent, but they're not actually a named insured. Is the property insured? This is particularly relevant for property owners' policies where, for example, I've had a claim where the property owner had a portfolio of properties. There was a fire at one of the properties and he made a claim under the policy. The claim was accepted and dealt with, and then further down the line, it transpired that that particular property had not been included in the presentation to insurers. It was unclear why. The insured accepted it, but had that not been picked up, then the claim might have been dealt with and paid. Did the loss occur within the policy period? That's particularly relevant for subsidence. Has the claim been notified in time? Not particularly relevant for property. If somebody's had a fire, they fairly obviously want to get their property reinstated as quickly as possible. If there is a delay, it's often in relation to theft, where perhaps somebody hasn't noticed something's been taken. And it can also be, if there is a delay in reporting a theft, it can also be a bit of a fraud indicator, which I shall come on to in a moment. Read the loss adjuster's report. Are there any non-disclosure issues, any potential misrepresentation? Is under insurance an issue? And I will come on to that in a moment as well. So as I said, dealing with many of the claims I've had put towards me over the past few years, the reasonable precautions clause is one that I don't see as much now, but I certainly had a run of them a few years ago. It says that I put a standard clause there. You must take all reasonable steps to protect the property insured and keep it in a good condition and repair. It's always put to me when the insured has done something which to us would seem a little bit stupid, I guess, but we're case hardened in the sense that we deal with claims all the time, and what might seem stupid is not necessarily sufficient to trigger the reasonable precautions clause. The reason is it's very difficult to prove. You have to prove subjectivity on the part of the insured. And by that, I mean that they appreciated there was a risk of damage to property, but effectively they didn't care because they had insurance. And two examples I can give you are an insured who burned a bonfire right next to his property. A burning ember went up through the eaves and set alight to his property within the attic space. Of course, it came to me saying, if you burn a bonfire right next to your property, is that sufficient to rely on the reasonable precautions clause? The answer I gave was no, because there was you just cannot prove he intended to burn his property down. Likewise, another insured that used a blowtorch to strip paint from the windows, the upstairs windows of his thatched property, and the property, as you can imagine, burnt down. Again, you just can't prove that he intended to burn the property down, no matter how ridiculous it seems to us. Fraud, but that almost isn't a topic in itself, but I refer to their delay in notifying the claim. With jewellery claims, I've had that come up quite a lot. I put down the fraud indicators there. Usually, I would recommend that you rely on more than one because you have the evidential burden. For example, then no proof of ownership. Well, not everyone has kept their receipts for an item that might have been stolen. Not everyone has photographs of them wearing jewellery. So it is it would really only, if you had a delay in notifying the claim, loss was incompatible with the lifestyle, and there's no proof of ownership, and the insured was either being pushy or there were inconsistencies, then I would say you've got some fraud indicators being ticked. I put there as well, don't forget about fraudulent device. That's a genuine claim, but it has been embellished so that it becomes tainted with fraud. That is very common in jewellery claims. So there's a theft, there is a genuine theft, their property's been broken into, no dispute over that, but the value of the claim is significantly inflated, £80,000 worth of jewellery stolen, for example, and no proof of ownership. So I've had claims like that recently where it's been difficult to prove, but and my advice has often been, well, I don't think there's sufficient to rely on it. It normally takes, it usually relies on evidence that is strong evidence, as I say, because you have the evidential burden. I've got the Betterment of Public Authorities clause. It's just one to consider. I've had a few claims where, or few instances where they've come to me because there's a dispute with normally an insured's loss assessor. The loss assessor has said they need to carry out some additional works following, for example, a fire, and the TPA has declined has not accepted those additional works because they viewed it as betterment. The Public Authorities clause would then became relevant because although the loss assessor hadn't explained it, the works that he wanted carried out were actually to comply with current legislation, and it was not a question of betterment. There were, in one of the cases I'm thinking of, there was a bit of an overlap, and it became quite a difficult task to work out what was betterment and what was being carried out for compliance with the Public Authorities clause. But it can be a bit of a grey area, but it is something to watch out for, particularly when there is a loss assessor involved. Accidental damage, I've got, it has to be sudden and unexpected. I should add that accidental damage is normally an add-on and isn't included as standard, unless it's an all-risk policy. I referred to a leaking pipe earlier. Well, that wouldn't be sudden, but the sudden failure of the pipe joint, that would be sudden and unexpected. This is one that I've had a lot over the past couple of years, I would say. Where an insured is, it turns out following an insured loss, the property is significantly underinsured. I've had it put to me, the question as to whether it amounts to misrepresentation. As any good lawyer would say, it depends. Check the policy wording. If there's an average clause, then my advice is no, you can't avoid the policy for misrepresentation. The reason is that the average clause gives insurers the protection that they are after. So they can't effectively have their cake and eat it. They've got the average clause, which is there to give them the very protection that they're after should there be any underinsurance, and then they can't then avoid the policy as well. There is an argument that if the misrepresentation is gross misrepresentation, such that the insured cannot have intended to represent that was the true value of the property, then there is an argument that misrepresentation could be put forward as a reason to avoid the policy. And by that I mean I've had one recently where it was a listed property and the rebuild cost would have been just shy of 3 million, and the insured had sought cover for 500,000. Well, that was one where we did run an avoidance argument because of the despite the average clause, because the property was so grossly underinsured. Additional issues, don't forget, do you need to reserve your rights pending conclusion of investigations? And the one point I can't possibly emphasize enough is don't forget about subrogation during the claims process. Preserve evidence and obtain witness statements. It should be part of the claims process instead of an afterthought. And what can happen is when files are audited afterwards, sometimes for subrogation purposes, by then, an insured has got they're back in their house after a fire, or they've got back in their commercial premises after a fire or escape of water. They just want to get on with their business. They're not interested in assisting insurers anymore and digging out any evidence and paperwork that we might need. I've got a couple of subrogated claims at the moment where I really am struggling to get the information I need from the insured because they're just keen to get on and effectively run their business after moving back in. So do make it part of the claims process. grab the other slide. That concludes everything I have to say today. Sorry, it is a little bit of a whistle-stop tour, as I say, by its nature being an introduction. I've tried to touch on as much as I can without overwhelming you. My colleague Harriet will now pass on any questions that may have come through.
Thank you, Pete. Sorry, I was on mute. Yes, we have got a couple of questions, if I may. The first one takes you back to the point of underinsurance. If insurers can avoid because there is no average clause, what approach would insurers take to misrepresentation per se, would you say?
It would depend on what the underwriter that rate the risk would have done. So if, for example, the claim I referred to, if the rebuild cost had been over 2 million, which it was, then it wouldn't have fallen within a risk that they would have written. In that case, you can avoid the policy for misrepresentation. If it would have fallen within the risk criteria, but they would have charged a much higher premium, then it would be dealt with that way. And in terms of under the Insurance Act, it would be dealt with in terms of the payment under the policy, indemnity, would have been adjusted accordingly in relation to the premium.
Thank you. One further question. The questioner asks, I take pictures of my jewellery and pens on a black mat to prove what I own. I catalogue the photos. Is this sufficient, do you think, to prove that you own the jewellery, which are Rolexes and Mont Blanc pens?
Yes, normally.
Right, that's easily answered. One last question before we go, if I may. Taking you back to the reasonable precautions clause, could you give us some further insight on what the criteria or the benchmark might be for taking reasonable steps? It's a fairly wide open question because I appreciate there's an element of subjectivity involved.
Yeah, I mean, that's a good question. To be honest, I'd say I'm reluctant to give a benchmark. It's by its nature is very case dependent. And I would just say it's purely fact specific. What one claims handler might think is a stupid act, another claims handler might not. So I think it's just a question of you've got to consider the actual act that the insured carried out in the context of what the reasonable person would have done. Now I know it's fairly obvious that if the reasonable person wouldn't have burned a bonfire right next to their property, but this guy did. But then the difficulty is, as I said, the subjective test, and did the insured intend to burn down his property? Well, how do you prove that? He lost a lot, and he's not going to risk declining his having his claim declined. So in terms of benchmarks, I'm afraid it would just depend on the actual facts of circumstances surrounding the loss.
It's interesting, isn't it? Because the other example with the blowtorch and the thatch roof, you might think is a more unreasonable thing to do.
Yeah, and don't get me wrong, we even went and got counsel's opinion about it. It wasn't one where I looked at it and said, look, I don't think you're relying on this is rarely successful, so I don't think you stand a chance. It wasn't that straightforward. It was a thatched property and they're using a blowtorch, and the thatch overhangs the windows in some cases. But it's just people do stupid things, and as I said, I think as insurers and as solicitors that deal with insurance claims, we just see these claims coming across our desk all the time. So our approach to them is going to be different to something that the reasonable man might or woman might how they would approach them. Yeah. It could be something that he's done 100 times, and on 101st time, a property burnt down. So that's another thing that you've got to consider as well.
Well, thank you very much for those answers. In keeping with our usual aim to finish on time, that's all we have time for on the question front, and I'll pass the baton back to you to conclude.
Thank you very much. Thank you very much for attending this. And there is my email address. As I say, the slides will be sent to you. Please don't hesitate to drop me a line with any questions that you might have.